So my name's Luke Alexander. I'm the president and CEO of Newcore Gold. I spent the first 15 years of my career on the investment banking sell side of the business. And what I learned through that experience is that ultimately you really need three things to have a successful company. One, you need to have a great asset. Two, a proven management team. Three, strong capital market support. And we're very fortunate at Newcore to have all three of those things. Let's start with the team and the institutional and capital market support that we have. Again, I spent 15 years on the sell side of the business, covering all the big global natural resource funds in the UK and Europe, advising ASX, TSX, London-listed companies on different transactions around the world. So that's my background. That's where I also got to know the board involved here and was approached about 2 years ago to join as CEO of the company. We're also very well supported by very deep-pocketed, long-term focused institutional investors. A number of them everyone will be familiar with here. We also have very strong support from a number of tier one investment banks out of Toronto, with target prices ranging from $1.45 to $2.25, as well as a very tight capital structure, only about 121 million shares outstanding, and a good strong cash position to ultimately fund our entire program. ESG is something that's very important to us. Our view is that fundamentally, if all shareholders or all stakeholders benefit in a project, that's the best way to push things forward. Our project, the Enchi project, it is a district scale exploration project in Ghana. Ghana is a tier one jurisdiction to be operating in. It's Africa's largest gold producer, sixth largest gold producer globally. With that, you get a very well aligned government, as well as a huge amount of skilled labor in country for us to leverage off of. But at the end of the day, I always say, don't listen to me as a biased single asset company. Look at what the major companies are doing in country. You've currently got 4 of the top 10 largest gold producers on the planet operating there. Newmont being the largest, they are in the process of investing another $800 million into Ghana, which will take their production from 14% globally to roughly 20%. I think that speaks for itself in terms of what a tier one jurisdiction it is. 2 prolific gold belts run through Ghana. You've got the Ashanti belt, as well as the Sefwi Bibiani belt. We've got great neighbors to the north of us. You've got Kinross's Chirano mine, about 50 kilometers away. To the north of that, the Bibiani mine. And then here's that Ahafo mine, one of Newmont's 2 producing mines in country. So true elephant country from that perspective. The other great thing is that we've got really good infrastructure. So we've got a paved highway that runs right through the middle of our project to the town of Enchi. Enchi's got about 15,000 people, so it's got all the kind of support services we could want. We can house all of our employees here, but also importantly, it sits far enough away from our project, about 10 kilometers as a crow flies, that we don't anticipate any issues when it comes time to building it. Sitting about 5 kilometers outside of town is our core shack. This really highlights the infrastructure. There's that paved road. There's a power line on the other side of the road, gas station, cell phone towers, so we can leverage off of all of this. Middle of last year, June, we put out an updated PEA. This was an update from a 2016 PEA that we had, and this was outlining a very simple open pit heap leach project. Looking at it at an $1,850 gold price, we're looking at an after-tax NPV of $302 million, after-tax IRR of 54%. And one of the things that really drives the economics is obviously the low capital required for a heap leach project. When you look at it in terms of, for every dollar that you invest into the project, you're getting $3 back from an NPV perspective. So this is a very attractive ratio from that perspective. In terms of the resource, we also put out an updated resource. So we currently sit at 1.4 million ounces. If you look at all the historical drilling that feeds that, you're looking at about 110,000 meters of work. Of our existing program, we expect about 45,000 meters will go into a future resource update targeted for Q4 of this year. So that's where we start to think back of the envelope, 45,000 over 100 110, we'll start to push 2 million ounces with an update. But outside of that, we'll have also made some new discoveries, as well as start to test the opportunity at depth for the first time ever. I'll just take you into the property now and kind of spin you around these 3D models quickly. So Sium's our largest deposit, followed by Boeing, Niam, and Quachikrum. We have been expanding the resource area at all of our existing deposits. A good example of that would be our Boeing deposit, where what you're looking at here is a 2.8 kilometer pit constrained resource. We've extended the mineralization 400 meters to the north, 1 kilometer to the south. You can do the back of the envelope of what 50% of additional mineralization on this zone will do. We've also, as part of this drill program, allocated 16,500 meters to new targets, areas that have never been drilled before, and we're very excited to have made 3 new discoveries on the project. 2 of them are on very large targets, 6 kilometers by 2 kilometers in size, so a real opportunity to significantly grow the overall resource. The 4th area of focus with our drill program has been the opportunity at depth. So we've extended the mineralized footprint at all of our existing resource areas. Those areas remain open along strike. We've gone back to previously drill tested areas. We've made additional discoveries at those areas, and we will move those into the resource category over time. We've made new discoveries, which I've just talked to you. And the last thing is we wanted to make high-grade discoveries at depth. What we're looking at here is a long section of our Enchi project, and we're comparing that to Kinross's Chirano mine 50 kilometers to the north of us. We've then gone and superimposed the depths of the oxides and transitional zone. The average vertical depth of our current resource is only down to 63 meters. So as experienced resource investors, you'll recognize we've still just scratched the surface. Where we really see these greenstone hosted deposits along the Sefwi Bibiani belt increase in size and grow in grade is as you start to drill deeper. For the first time ever, as part of this 90,000 meter drill program, the largest ever drill program on the project, we've started to test below 150 meters, and we've had some very encouraging results. Looking here at this cross section of hole number 45, this is the deepest hole we drilled at the time here. We hit 5.4 grams over 9 meters, sitting 500 meters to the south of this in this hole number 48. Again, as we got down to kind of 175, 200 meters below surface, we hit 4.5 over 13 meters, 7.4 grams over almost 8 meters. When I now pull you back and look at this from a long section perspective and zoom in, and if everyone can squint, that might help, I'll highlight some of the results. So 5.8 grams over 7 meters, 5.6 over 8, 5.4 over 9, almost 5 grams over 8 meters. We can now with confidence start talking about how we think we've hit one of these high-grade feeder zones that we see at other deposits along trend from us. Sitting 500 meters to the south, again, 3.2 over 9. Here's that hole, 4.5 over 13, 3.5 over 9, 6 over 6 meters. So we think we've identified another one of these high-grade structures that ultimately extends at depth. We need to get back in here, drill in between, but this starts to highlight the underground opportunity that we've got at our project. So I guess just to recap, top-tier management team, proven track record of making shareholders money, truly aligned through our 27% ownership in the business. Really strong capital market support. One of our largest shareholders, John, sitting here. So it's great to have that kind of support. We've also are obviously operating in a tier 1 jurisdiction, underpinned with a robust PEA. But where we're going to create the value from here is through all that additional drilling that we're doing.